Good morning. Welcome to Trading Hour. It's a brand new week of Trading Hour. I am Reema Tendulkar and with me is Sonal Boothra. And the Nifty is just about hovering around the 25,400 mark. But this morning we did scale new peaks. So the new peak on the Nifty is 25,445. We're holding up in the green, but the gains are modest now on all the benchmark indices. So up close to about 0.1, 0.2%. But in the last 1 hour, we have come off from that peak of 25,445. We've lost about 55, 66 points. Remember, most of Asia is shut today, whether it's China, Japan, or even South Korea. But the markets which are trading, Hang Seng and even Straits Time, they have a minor red tick going for themselves, though the handover from US was positive on Friday. So we're holding up in the green, and that's what we're going to take.
And it was a stellar week for the US markets last week, right? The S&P, NASDAQ, the best week that they've seen in a long time. But yes, it was expected to be a strong day for us today. As you said, we have seen some new levels. We've come off from those highs. And if we talk about the mid caps, they are the ones which are outperforming today. Of course, banking index also is doing that. But the small cap index, that is the one which is not doing as well. It is in the red right now. So that is at the day's low, in fact. So while we are seeing a lot of buying come by in the mid caps, that is not the case in small cap index right now. In terms of sectoral movers, we have the Nifty realty space, which is doing well, Nifty infra doing well. But again, we've come up from the highs. We'll have to see whether we sustain these levels, we build onto those or not. But banking, that has made a comeback today. And other than that, it's actually getting off the highs that we've seen earlier.
Okay, we've got a power pack show in the next 1 hour. So let's tell you what all we'll be discussing. Bajaj Housing Finance has got a blockbuster debut, dream debut on the Lal Street. We'll get you the key highlights from the management commentary and how it compares with the other peers. But not just Bajaj Housing Finance. Today, we've had listings from Kross and Tolins Tyres too.
And the management of Route Mobile will also join us to discuss the OFS and the business outlook going forward.
Santosh Singh from Motilal Oswal Asset Management will also join in to talk about the markets.
All this and much more in the next 60 minutes, which are the details are coming up for you. But of course, the big listing today, and we have to talk about it, it's Bajaj Housing Finance. Makes a stellar debut on the exchanges, has listed at a whopping 114% premium to its issue price. Vamakshi is joining us with how this housing finance major stacks up against the peers. Vamakshi.
Well, absolutely. Like you rightly pointed out, it's a stellar debut for Bajaj Housing Finance, and rightly so, given the company boasts of a very strong franchise, has a very strong brand recognition, and is AAA rated. When we look at the fundamentals of the company as compared to some of its peers, nothing to complain here, and that is because the company boasts of the best-in-class asset quality with the gross NPA at 0.28% and the net NPA at 0.11%. The coverage ratio too is one of the best amongst peers, the lowest credit cost in the sector. And even despite this, the company scores over some of its peers like LIC Housing Finance, PNB Housing Finance and Canfin Homes over return ratios like net interest margin as well as return on asset. The company boasts of a NIM of 3.9% and return on asset at around 2.3%. But that said, a concern is around the NIMs. They have been declining in the last few quarters due to rising cost of funds, and this is despite the increase in the higher yielding portfolio share. The company also has a very strong regional concentration. In fact, top 3 states contribute to nearly 70% of its AUM. That said, let's also look at how the company's valuations stack up against some of its peers. At the current price, there is no doubt that the company trades as a significant premium as compared to some of its peers, which trade anywhere between 1.7 to 4.2 times. The stock listed at a premium of nearly 115% at 150 rupees per share. With that, the price to book stood at 6.84 times, and if we consider that the stock could possibly hit an upper circuit of around 165 per share, at the upper circuit the price to book will then stand at almost 7.5 times, which is again at a significant premium to some of its peers. So that said, overall it's a very fundamentally strong company, but the valuations are something that we will have to watch out for.
Okay, and I think the question now, because very few people would have got allotment in Bajaj Housing Finance given the subscription, so what should you do? Everything is great, it's a pedigree brand, but can you go out and buy these current levels? But this morning, the peers are seeing some profit booking. So LIC Housing Finance is down 5%, 5.5%, PNB Housing Finance, Canfin Homes. So across the board, these stocks, after a little bit of a re-rating in the prior 2 weeks, there is some profit booking visible here. And even Bajaj Finance and FinServ, the other two, from the Bajaj Group are under pressure. But thank you, Vamakshi, for that. Let's also listen into what Sanjeev Bajaj, CMD of Bajaj Finserv, and Atul Jain, the MD of Bajaj Housing Finance, had to say when we spoke to them on the listing. We quizzed them on whether this 30% growth that they've seen for the last couple of years, is it sustainable? What is the outlook on margins? Listen in.
Relevant ones. We've had very strong growth, but this is in the background of a very strong, consistently growing economy. And if you look at credit cycles in India, we expect steady credit growth at 12 to 15% in the housing industry. And on the back of that, we are enthused that we can continue to grow strongly. The economy is showing very strong tailwinds, and that's what gives us this comfort.
We are a variable rate company. On a asset side, our assets are variable, which are largely linked to a floating rate, which is linked to our cost of funds, and the liabilities are also largely variable. So on a steady state basis, through the cycles, mortgage companies generally have a steady state margin. So we do not expect any impact on margins from the listing, whether positive or negative, because that was from a cost of fund perspective, because we had already been a highest rated domestic rated company, and our cost of funds are relatively quite competitive compared to the market. And with a variable rate asset size, the NIMs are likely to remain stable, like in case of all variable asset companies.
And while Bajaj Finance had a stellar opening, Kross and Tolins Tyres had a flat listing. Let's talk about these two new kids on the block as well. Vinny is joining us with more details on the valuations, what do these companies do, and a lot more. Vinny.
Yes, both these companies are mainly auto ancillary side. So let me start with Kross. Now, when you look at it, Kross actually listed at a bit of a discount, then managed to pick up a bit of a pace. So yes, overall as of now, it's up almost 8 to 9%, 12% as of now is what we can see on the screens as well. So yes, market cap is around somewhere 1,500 crores is what we could say for Kross. So yes, the PE is at around 16 times, which is still at a discount versus its peers, whether you compare it in terms of an RK Forging or even a Jamna Auto, it's still at a discount versus that. So it's going to be interesting to see how they move up, because the management, when they spoke to us also, they highlighted that the 44% CAGR growth which they managed to see in the last couple of years, that may continue going forward. They're expecting EBITDA margins in the next couple of years at around 15%. So positive commentary surely coming in from the management the last time we saw. Today when we spoke to them as well. So yes, interesting to watch out for Kross Limited. Other than that, Tolins Tyres, that's mainly into the business of they have two segments, tire as well as street tire, and exports also is something that they're focusing on. 40 nations is what they export to currently. Listing has been a bit of a muted set that one has seen coming in for Tolins as well. Not much of an excitement there, but yes, versus peers in terms of the performance, they still have a long way to go. The market share in street tires is around 2.6%, and in tires is only minimal 0.06%. This is according to the RHP that we're seeing. And most of the revenue comes in from street tires, so that is something we'll watch out for in terms of how they actually manage to see more gains going forward here. Versus its peers, revenue is also still quite less. Tolins has a revenue of only 227 crores as of FY24, while TVS Sri Chakra had 2,000 crores, 2,900 crores approximately. LG also had around 386 crores. So will be interesting to see how this plays out, though it's a smaller company in terms of market cap versus its peers as well.
Thank you very much for that. The subscription was pretty solid. I think it was close to about 23, 24 times thereabout. But the debut has been a bit subdued, but in the green now, still up close to about 5%. Sonal, there is this real estate company, Arkade. It's a, I think, Mumbai-based real estate company.
Yes, and the IPO is opening today. So there's no dearth of IPOs now in the market. And real estate, we are getting an IPO after a long time. It's been really long that we did that. So the IPO opens today and it shuts, of course, on 19 September. It is, the price band is around 121 to 128 rupees a share. It's a decent size IPO. The issue size is 410 crore rupees. There is no offer for sale by the promoters. And post-listing, the market capitalization is expected between 2,300 to 2,400 crore rupees. The current promoter holding is around 80.1 66.17%. So post-listing, the promoter holding will come down to 66.3%. So it's largely the promoters who will be seeing some decline in their holding as well. The usage of proceeds, they'll be developing ongoing and upcoming projects. There'll be general corporate purposes and funding acquisition for future real estate projects as well. Now, about the company, as you pointed out, it is a Mumbai-based real estate player, and they're both into development of fresh projects and redevelopment as well. So redevelopment continues to be the big theme for Mumbai-based real estate players as well. I think they get it in equal amounts, both from fresh projects and redevelopment projects. Now, the ticket size per unit for them on an average, they have just given a data here. It increased to around 2 crore rupees versus 1.7 crore rupees that we saw in FY22. That's the average that they've seen. And they mostly cater to suburbs, that is the Eastern MMR and the Western MMR region, where Western MMR is around 89% of their sales. Eastern is very less, it's around 11%. But do remember, a lot of redevelopment opportunities coming in the Eastern side as well. In terms of their financials, they have done volumes of around 0.19 million square feet, which is much lower than the peers that Mumbai real estate sees. Collections at 258 crore rupees. The total units sold has been 258. That has been a sizable jump from FY22 levels. The balance sheet now, the operating cash flows have been lower, though the cash flow from all the activities has been in the positive, but operating cash flows have been negative in FY23. They have reduced in terms of losses from FY22, but this is something that you should keep an eye out on, that the operating cash flows have been in the negative. In terms of NAV, if we compare it with other real estate companies, because that's the best way to compare a real estate company, not via PE, because the PNL is very lumpy. The company has the lower NAV on the lower side, 21 rupees, that is the net asset value per share. Its Keystone is 157. Godrej Properties has it very high. Of course, it's a stock which trades at rich valuations, where Macrotech at 180 and Suraj Estate at 148. Risks now. Now remember, the construction costs are around 78% of their total revenues, and they have no long-term agreements with any of their labor and key materials. So any fluctuation there, any delay there is something that could increase their cost. They've already seen that increase in FY23 versus around 40% earlier. There's reliance on third-party contractors for construction of projects, which they do not control directly. So there could be some delay as well. So yes, it's a decent sized project, but we'll have to see the execution because the size is very small here. But since they're catering both to redevelopment and development, there could be a potential of a bigger land bank and a bigger pipeline as well for the company.
Okay, its market capitalization will be 2,400 crore rupees. So much smaller than, say, even a Keystone Realtors, whose market cap now stands at closer to 8,900 crore rupees. So a Mumbai-based real estate company up for grabs in terms of opening up IPO. We'll slip into a break on that note. We'll come back and discuss commodities. Manisha Gupta joins in on the other side.
Welcome back. You're still tuned into Trading Hour on CNBC-TV18. Well, we have a lot of action which is happening in the commodity space. Let's shift focus to that. Manisha is joining us today. And today we are focusing on gold again. Manisha, what's happening here?
Well, another day and another all-time high is what we are working with in case of gold prices. So, interestingly, all time zones seem to be buying. Asia today started with buying, and we've seen that happen in the various previous days and weeks as well. So 25.88. Well, as we're talking, that's an all-time high on your screens right there. So not too far away from that $2,600 an ounce mark. The support in case of gold seems to be coming in from global central bank buying. And this is going to be an important week because the US Fed meeting is something that the street is watching out for. And then apart from that, you have Bank of Japan, Bank of England, China, all of these monetary policy meetings also happening within this week itself. Well, we have seen the gold prices gain up by 3% in the previous week. Prices are up 24% in this year until now and a good 35% in the last 1 year. With the kind of gains that we've seen in this year for gold prices, it actually has outperformed various other asset classes, including Nifty and Sensex as well, by the way. Well, going forward, the expectation is that you could be looking at further higher highs in case of gold prices. That is what we've done in sense of is in this year. So from the lows of this year, we've gained up by $600, and from the starting price of this year, we are up by $500 an ounce in case of gold prices. But $2,700 an ounce is a possibility, is what Goldman Sachs reports suggest in 2025. UBS talks about 2,700 as well. Citi says that for the near term, 2,600 is what they're looking at as a target. And for the longer term in next year, $3,000 an ounce is on the charts as well. JP Morgan talks about an average 2,500. Bank of America, Macquarie talk about $3,000 an ounce as a possibility in the next year. And then there are various reports like Exum Australia, Wisdom Tree, Prime XZBT, RJO Futures, Zener Metals. They all talk about levels anywhere between $2,700 to $3,000 an ounce by the mid of 2025. So clearly very, very bullish moves continuing here.
Yes, that we can see just going up, up and away. Thank you so much, Manisha, for joining us with all those details. Let's slip into a break. When we come back, we'll discuss market technicals with Soni Patnaik of JM Financial Services and also the top trading bets.
Modest morning of gains so far. So let's find out a few technical trading ideas. Soni Patnaik from JM Financial is now with us. Soni, what would be your top stock trades?
Good morning, Reema. Thank you for having me on the show. I think Nifty is holding quite strongly above the 25,300 mark. From here, it can test 25,500 to 25,800 on a positional basis. So the top stock trading bets would also be on the long side. We can see very strong movement coming in the capital goods space today. Stocks like Dixon, Larsen and Toubro, ABB are seeing very strong move. The first pick comes in with Larsen and Toubro. Futures one can buy around 36.50, 36.60. One can buy in that level, keeping a stop loss of 36.20. First target of 3700 to 37.30 can be seen. So Larsen and Toubro is seeing very strong short covering move today, and the stock is looking quite positive to test and break above the hurdle of 3700, above which it can test 3730 plus levels. The second pick again from the capital space one can see is ABB, which is witnessing fresh long build-up position. So in ABB futures, one can buy around 78.20, keeping a stop loss of 77.70 and a target of 79.50. Above that, a second target of 8,000 can also be witnessed. The third pick for the day would be in IT space, Naukri Info Edge, which is looking quite strong with a fresh breakout on charts today. So one can buy Naukri in futures around 78.80, 78.60, keeping a stop loss of 7,800 and a positional long target of 8,000 can be seen.
Okay, Soni, thank you so much for joining us with those details. Let's move on now. Adani Power and Adani Green, these stocks are surging in trade today on the back of an MK note. Vivek is joining us with all those details. Vivek.
Well, that's right. So an important development that's actually come in over the weekend as far as both of these companies are concerned, Adani Power as well as Adani Green. So what's actually happened is that Maharashtra State Discom has actually gone ahead and issued a letter of intent to go ahead and procure energy from these Adani Group entities. So 6.6 gigawatt or 6,600 megawatt is the kind of power that both of these companies are expected to supply. Adani Green Energy will supply close to 5 gigawatt, and they will be evacuating power from the Khavda facility. And Adani Power will be supplying close to 1.4, close to 1.5 gigawatt of thermal power from the 1600 megawatt capacity, that is 2 into 800 megawatt that the company actually enjoys. This is a hybrid win as far as these companies are concerned, and these wins were actually received for the company via the open bidding process. Now, when you're talking about Adani Power, they will enter into a 25-year power supply agreement with the Maharashtra State Discom, for the supply of close to 1.5 gigawatt. And Adani Energy Solution, after this particular PPA, capacity jumps up to almost 26 gigawatt at 2.7 rupees per kilowatt hour is the kind of tariff that they will enjoy. MK has gone ahead and written on both of these companies post this particular order win. On Adani Green Energy, they reiterate buy. They have a target price of close to 25.50 a share. They're saying that the development is quite positive. Secured PPA capacity is now at 26 gigawatt, and a flat rate of 2.7 rupees per kilowatt hour is quite attractive. They're saying that along with that, Adani Power has quoted close to 4.08 rupees per kilowatt hour, and that also is viewed quite favorably. Expect staggered project development over 3 years, as well as connection to the interstate transmission system. Overall, a positive development, and both of the Adani Group stocks are doing quite well in the session today.
Thank you for explaining that. Get into a break. On the other side, we'll talk more about the market. Santosh Singh from Motilal Oswal Asset Management joins in next.
Okay, 25 points higher on the Nifty. We stay where we were earlier as well. The outperformance from Bank Nifty continues. In the Nifty pack, we have a couple of these movers in last couple of minutes. So Eicher Motors, that should come up for you on the screen. Sun Pharma is the one which is at the day's high right now. Divi's Labs as well. So some of these pharma names, they are at the day's high right now as we speak. Tech Mahindra is the other one which also is doing well. So a couple of these names, just keep them on your radar. Let's move on and talk about market fundamentals now. Santosh Singh, fund manager at Motilal Oswal Asset Management, is joining us now to discuss that. Santosh, good morning. Thank you so much for joining in. Well, I have to ask you, because there's so much happening and we have the big Fed event which is going to happen this week as well. What is the expectation, and do you think that could be the next big trigger if there is a rate cut, and what if there is no rate cut this time as well?
See, so this rate cut expectation is going on for such a long period of time, right? And every time we are getting into this particular event, and we have been talking about rate cuts. So what we have seen is that actually it's have not been impacting the market that much. Specifically, the Indian market, it has not been impacting that much. But I would expect that if there is a rate cut and if there is a dovish stance going forward as well, we might see certain segments of the market doing well, which might be good for the headline sort of index. So I think IT might do particularly. IT could be one segment which might do particularly well.
Santosh, wanted to get your thoughts. You manage the focused fund. You're the lead CIO for that, and your top holding is Religare Enterprises with about a 10% weightage. Now we know that the company day after day makes headlines. It's embroiled in this battle between Rashmi Saluja and the Burman. So from a shareholder point of view, how are you reading all this in terms of news flow, and what are the fundamentals of this company?
So see, we bought it long back, right? Not after the open offer. We bought it long before the open offer. So one of the reasons we bought it is that actually I am quite positive on health insurance space. That's one. I'm quite positive on that space, given it's growing at around 20% and it's a total B2C business, right? And Religare owns almost majority stake in Care Health Insurance, and I think that would be the reason why there is so much a fight between the promoters, the incoming promoters and the outgoing management, or whatever could be the scenario. But there is so much fight because of that. But it's an extremely sort of interesting company where they hold this majority stake in the second largest health insurer in India, right? Which means, and which is growing in excess of 30% for multiple years now. It's one of the fundamental, if you look at the overall fundamentals of that company, I think what we are looking at is that this is a sub 100% combined ratio company. So all in all, the company is doing very, very well. The news flow around what's happening on the open offer is all across, and I think they should settle down really fast, because I think it's all about how the regulators now take it forward. It should settle down very fast. But if that were to happen, I find it a really, really attractive sort of company to be.
Okay. The other name, interesting name in the list is Paytm, Santosh. I just want to understand what's the rationale here, because there have been a lot of on and off on Paytm as well. What are the future triggers that you are looking at the stock that makes you bullish here?
So see, firstly, the space I am quite bullish on, right? It's I think you're going through the sort of all my holdings, and what you could see is that interestingly, there is no bank there, right? And the entire banking, no lending bank there. And the entire lending bank has been made up by the insurers or the payment providers. So if I look at the financial space, some of the spaces I'm very positive on is one, the health insurance we discussed. Second is the payment space. Because clearly the payment space is growing and digitization of payments is happening at a very fast pace. That's a really, really large space. If you look at the volumes which are happening in that space, it's really big. Growth is really good. And the other part of the equation is this is all happening when the UPI NDR is nothing, right? You're still not getting paid for it. And all of it is happening despite not getting paid for it. So one is the growth in that space, and second is the regulatory. At a lot of places there are regulatory negatives. There could be a regulatory positive here on the MDR front, which actually I'm not. When I bought it today, I've not sort of priced in my in my base case scenario. So that's clearly one of the thinking process which is there. Paytm is the market leader. If I'm talking about not per se the UPI space, but the space in which you're talking about the, you can say, vendor payments, right? It's one of the leaders in that space, and it's an Indian company where, and there are certain regulations. There is some thought process also on payments where the foreign sort of restrictions have been talked about. So it's in a very interesting space. Yes, again, there has been on and off with the regulators. Although we were lucky, we have not invested it at such high prices where we could have had trouble. So I find it really interesting space to be in.
Okay, we've got many more questions. Even wanted to get your thoughts in on L&T Technology Services, because the numbers, I look at the company closely, the numbers have disappointed for the last couple of quarters, and some of the peers have actually done better than it in ER&D. But I think that conversation's for another time. Thank you, Santosh, for joining in. Get into a break. On the other side, we'll invite Gautam Badalia from Route Mobile to talk about the way forward for the company. Remember, just last week, the promoters pared down their stake to 75% via an offer for sale. Welcome back. Here is a CNBC-TV18 exclusive. Now, the executive chairperson of Religare Enterprises is embroiled in a takeover battle of the company with the Berman brothers. And she sat down with CNBC-TV18's Ashmit Kumar for an extensive interview. We are talking about Rashmi Saluja from Religare Enterprises. Remember, the Enforcement Directorate has filed a case against Rashmi Saluja alleging illegal gains from ESOPs. Ms. Saluja, of course, has denied the charges and questioned why the issue is being flagged after the open offer made by the Bermans to take over Religare. She also defended the decision to delay the open offer, citing concerns on fit and proper status of the Bermans. Ms. Saluja also asserted that she will not resign from the company.
Religare had many phases before. It had a Singh Brothers phase, then it had us, and then now it is, as you say, is a battle-drawn kind of a situation. You generally only speak when there is a reason where your actions, which you've done extremely good, the hard work that you have put on, is actually taken a back seat. And then certain other things which need not to be discussed or talked about. So at times, you have to make certain clarification. And that's the reason, unfortunately, not here to talk good about myself or the work that the whole management has done, that spoke. And the reason when we did such a great work, and maybe that's the reason why people got interested in taking or acquiring the company. So I'm not too sure doing a good work is a good idea or not, but definitely very challenging. So that's the reason I thought that it's time that a lot of allegations that you've been hearing about, or I'm hearing about, it is totally unsubstantiated, and maybe you would like to know it more closely.
Absolutely. Let's in fact dive straight in. One aspect that made headlines a couple of days back has been the ED FIR. What the ED, broadly, for the benefit of our viewers, if I can just summarize what it says, is that there's one gentleman by the name of Vaibhav Goli, that he acted at your behest, is what the ED says, that he went ahead, he filed an FIR against the Berman family, making allegations, but he was acting on your instructions. The ED says that his actions were motivated, were done at your instructions, that he got some 65,000 rupees from you for filing that FIR. And finally, the ED concludes by saying that it's being done to obfuscate, quote unquote, obfuscate the detection of illegal gains via ESOPs. How would you respond to these charges?
When was this FIR filed?
We've come to know about it only more recently.
But I'm sure you must have done your own digging. When was this FIR filed?
It goes back a long time, so that's the question that's...
So first of all, this matter is sub judice, in the sense it is in the court or it is with the ED, and investigations are going to be there. I'll be very happy if the investigations will, of course, the truth will prevail upon it. We have no motive to do it. We have already spoken and we have given the clarification in the stock exchanges that it has got nothing to do with me or any of our employees at all. And we will cooperate fully to actually get the truth out. But as I read of the FIR, it was done in November and the open offer had come in September. And there was already a committee of independent directors in October where whatever the addresses and the concerns were there, they were already addressed. So there is actually no motive behind it. And that's something which is a matter of complete surprise to us. And we have already spoken about it in the all the legitimate areas where we need to. And as and when, wherever there is going to be an investigation, we will fully cooperate and we will ensure that the truth prevails on it.
Let's begin by asking some of the aspects. You correct, it goes back all the way to November 2023. So let me begin by asking you a supplementary question. Why do you think it's coming to attention now? And how would you respond to some of the concerns raised, especially on the ESOP front, saying that what the ED is saying, the long and short is that you as the executive chairperson of REL, you're giving yourself those ESOPs and therefore pointing at what the ED believes is an obvious case of conflict.
So I'm not going to be commenting on how ED is thinking about it or what they are going to, they have said. I will tell you as a corporate how the ESOPs, what are the ESOPs? It is basically an incentivization to the employees. Is it the first ever any corporate people or the employees have got the ESOP? When and how the incentivization of the ESOPs take place? When I joined the company, the share price was close to 17 bucks, right? And as it is, did I get ESOP after the open offer? Did I get ESOP after September? Did any of the employee, did they get ESOP after in REL? No. All those ESOPs that we are talking about until now have already been given, distributed only as per the company policies. Those company policies which have been around, which have been, revising as per the requirement always. So this is something which is done for any company to incentivize all the employees, and that is how it has been given not only to me but all to REL employees, to the subsidiary employees. The monies, in fact, where it has been exercised, the monies have come to the company for the growth of the company. So we are as much, we participate in the growth of the company by putting our own money, which generally the excise value comes after a complete, formula, how it is done, what it is done. So there is nothing, in fact, I really feel that by this particular instance or incident, the corporates should not be taken aback that, your salary, your hard work should not be questioned in a way that I'm not talking about ED, but before the ED, I was talking about the acquirers. Did acquirer talk about it? Why are they here talking about my ESOPs today or my employees' ESOPs or our colleagues' ESOP today? In fact, nothing has happened after the open offer. It has all been done before the open offer, 6 years. And they have voted. REL is a listed company. Nothing can happen without an AGM. Nothing can happen. Every time the proposed acquirers voted for it, I'm very thankful about it because they realized our good work. Every shareholder realized the good work, and that good work was incentivized and rewarded. Also at the time when nobody was ready to touch this company at all, 6 years, all the employees stuck to it. They completely turned around the company. And I really thought they turned around the company. They got the incentives for it. They put their own money for actually exercising, and then they put it back in the company.
All right, that's a CNBC TV18 exclusive. We'll keep getting you more excerpts of that exclusive conversation, but it's time for a short break now. Gautam Badalia from Route Mobile joins us now to discuss their business outlook and the way forward for the company. Stay tuned for that conversation.
Markets have dipped in the red now. It's 23,350 from the day's high. It's been a slip of about 95 points. Look at the way Titan is, come under profit bookings. So Titan, Britannia, some of these FMCG names are losing ground right now. But let's, as promised, talk to the management of Route Mobile. Remember, just earlier this last week, The company announced a strategic collaboration with Infosys to unlock new business opportunities. Not just that, even the promoters did an offer for sale of about 6%, which brought down their stake to 75%, SEBI's mandatory requirement. So to talk about all that and how business is shaping up, we have Gautam Badalia. He's the Group Chief Strategy Officer, and he's with us in the studio now.
Thanks.
Gautam, great to have you on the show. So first, let's talk about that offer for sale,
Sure.
right? So promoter stake is now down to 75%?
That's correct. It's below 75 now.
Okay, so it was a 6% offer for sale. Yes. And it was open to retail shareholders, etc. But was there any institutional investor who bought any stake?
Yeah, so good thing is, I think when we started marketing it and the kind of growth that we demonstrated and the guidance that we have given everything for the full year and the next 3 years, we were able to kind of get a lot of interest from large long-only funds. I mean, some of the largest MFs in the country. So they participated in it and they took the lion's share. So it's already there in the public. So SBI Mutual Fund took a lion's share of the entire OFS stake.
5.3%, right?
Yeah, so they took over 5% stake in the OFS.
Okay, so this is about the OFS. Back to the SEBI's mandatory requirements now. Let's talk about your strategic collaboration with Infosys, where you have spoken about unlocking new business opportunities. Can you explain what is it all about? How big would this opportunity be for you? And what is the financial impact of this on your P&L?
Yeah, so I mean, Infosys is again a kind of an enabler and a validation of the guidance that we have given. I mean, we were already kind of working on some of the group synergies as part of the Proximus vendors. So this Infosys tie-up per se will help us accelerate our sales cycle with all the deployments that Infosys has globally. Today, if you look at Route Mobile, I mean, Route Mobile plus Telesign, BICS, I mean, the entire Proximus group, we are the largest in terms of our geographical reach. And if we can leverage some of these strengths to work with partners like Infosys and few large CRM partners, we could really accelerate our growth. So essentially what this Infosys deal will entail for us is, it will help Infosys offer these solutions to their enterprises, and it will significantly reduce our sales lead cycle.
So it reduces your sales lead cycle. How does it impact the financials? Like, do you have already considered it in the guidance that you've given? Does it kickstart right away?
Yeah, so I mean, as I said, I think we demonstrated kind of a 14% growth last quarter, YOY basis. We have talked about a 18 to 22% growth for the year. So a lot of these growth, I mean, we are talking about a growth rate which is greater than the industry growth rate per se. So some of these were already part of the guidances that we had kind of envisaged for the year.
So 18 to 22% revenue guidance for this year still stands?
Yes, that's correct.
And how has Q2 shaped up vis-a-vis Q1?
So Q2 has historically been a little muted to Q1. I mean, it's been kind of flattish to Q1. And we're seeing decent amount of growth even happening in Q2. And I think with the festive season coming, I mean, in Q3, we should see a significant amount of acceleration and throughput increasing multifold times on the platform.
Q2 revenue growth should be about 5-10% better than Q1? I mean,
yeah, I would not want to kind of commit.
But better than Q1?
Yeah.
And what about exports? Because in the past, you were facing some challenges on the export front.
So as I said, I think ILDO revenues, I think, were impacted last year during H2. Essentially, I mean, if you remember, I mean, there were a lot of artificial bot traffic, I mean, hitting a lot of platforms. But good thing now is, I think that's already in the base. Most enterprises have taken corrective action to kind of eliminate some of those artificial bot traffics. So now we are seeing good revenue traction growth coming back on ILD as well.
Okay, and what has been the volume growth in communication, say, was via SMS versus WhatsApp versus enterprise communications? How does that differ for you? And is it expected to improve now that we have Q3 coming up with so many festivals, sales coming up?
So SMS, I mean, because of the scale at which it operates, it's growing at a lesser growth rate than some of the newer channels. I mean, where the base is kind of pretty low, but some of the newer channels, I mean, we are witnessing almost 60-70% kind of growth rate.
And SMS would be?
SMS would be, I mean, between 10 to 15% kind of a growth rate that we are looking at.
And that is expected to improve coming in Q3, the growth rates across segments.
That's correct. So, I mean, we maintain, I think we should be able to kind of demonstrate, I mean, be in that 18-22% kind of a growth overall, yeah.
So your new products, which is basically what's communication via WhatsApp, RCS, etc., email, is about 7% of your overall revenues.
Yeah,
today.
at present, yes.
Okay. Now, considering it's growing much faster, What do you think this number could be, say by the end of FY25 or FY26 end?
Yeah, so 3 year, I think it should be about 15% of our revenue pie. And within that, I mean, if you look at RCS today, I mean, till about the Apple event, I mean, RCS was only powered over Android. Now with iOS kind of opening up the interoperability for RCS, it could again be a game changer for the communications industry.
And how does the pricing differ between the export business and the Indian business? Are you able to take on more price changes regularly? When was the last one that you took?
So in terms of, I think the price changes are pretty, I mean, so there are more, from a domestic standpoint, I mean, it's more inflationary kind of an increase. On the international ILD price changes, some of them were kind of very, very rampant, I mean, in the last 4 or 5 years, but now things have steadied a bit. And especially, I mean, considering the headwind that we have witnessed during H2, we don't envisage any significant price increase coming, I mean, for the ILD business per se.
And for the domestic as well?
Domestic also, I mean, it's pretty steady, it's steady right now.
Okay. I remember a couple of quarters back, you know, the competitive intensity in your industry became a hot topic of discussion when one of the, you know, I think telecom companies bid very aggressively, etc., for a large, you know, PSU bank. So can you tell us how is competitive intensity? Because realizations have been a bit muted.
Right. I mean, so I actually have a little different perspective to this whole thing. I mean, so if you look at any global company, right, and global technology company, they are not constrained by geographies. They would have subscribers across the globe. You talk about a Meta, you talk about a Google. And with this partnership with Proximus today, I mean, we have also embarked on that path where we have pretty much the globe as our TAM, our target addressable market. So to that extent, I mean, so, I mean, that one particular operator, I mean, while they, I mean, created a little bit of a price war, but I think things have stabilized a lot. And
so, so now when you get new, you know, when you go out and bid and get new clients, is the pricing same as it was 6 months back, or is it progressively?
So competitive intensity is there, but having said that, today if you look at it, it's only a handful of large global CPaaS players, I mean, who are competing for that pie. So like if you look, were to kind of anecdotally compare this with the payments industry, you have large payment aggregators. Likewise, I mean, we believe in CPaaS also in 3-5 years time frame, you will only have large CPaaS players kind of catering to the global wallet.
Okay. You know, last question, and we don't have much time, Gautam. So you'd guided for synergies of around $100 million. This is between Proximus, Telesign and Route Mobile. How much is realized so far, and when do you achieve the full synergy?
Yeah, so I think as we speak, I think we've been working on the synergies and the realization of those synergies. And on a quarterly basis, I think some of these numbers will kind of come through. A good thing is I think we've already created the wireframe and kind of now working on those trajectories right now.
Any ballpark number, 40%, 50% of that $100 million that you've achieved already?
Honestly, it is too early to kind of comment on that. But I think we are treading the right path, and hopefully I think we should be able to come and in 3 years' time talk about that $100 million of synergies being realized.
Gautam, great chatting with you. I think the market also likes what you've been saying because Route Mobile stock has reacted positively. So some key takeaways are that there is no more supply overhang. The promoter stake is now down to 75%. So that is out of the way. Secondly, SBI Mutual Fund has picked up a lot more than 5% in the offer for sale. Q2 has shaped up better than Q1 so far, though they're not committing to any number and how much better. But things are improving. And fourthly, the company is committed to maintaining that FY25 revenue guidance of 18 to 22%. Well, with that, from the entire team, it's a thank you for watching Trading Hour. Stay tuned. Halftime Report is up next.